Hello. Dear guests, we invite you to take your seats. The session will start in a couple of minutes. Distinguished audience, please take your seats. We're starting our session. Dear panelists, please. Please have a seat. Dear ladies and gentlemen, dear guests, first of all, thank you for your interest to Kazakhstan Energy Week 2025. I represent Kazenergy Association, who is the key organizer of this event. My name is Oljas Isabekov, and I'm honored to be a moderator at this very unique session. Our special appreciation from Kazenergy goes to our very prominent panelists. Let me introduce them. Mr. Behruz Baykalizadeh, who leads the Petroleum Studies Department at the OPEC. Then we have Dr. Ali Akber Degan, who is Senior Oil Supply Analyst at the OPEC. And last but not the least, Mr. Ayat Al-Ameri, who is the Energy Demand Analyst, also representing OPEC. As I said, this is a very unique session. It's unique because for the first time in Kazakhstan, we'll be witnessing the presentation of the World Oil Outlook prepared by OPEC. And this publication is one of the flagship publications of this organization. Our session will have three parts. The first part will be a presentation. The second part, a very short video. And in the end, our distinguished panelists will have some time for additional comments. But before we start, I would like to make a small announcement as a person who represents Kazenergy Association. Our association is also strengthening the national analytical capacity. For these purposes, last year we established an analytical center, which is called Energy Insights and Analytics Center. Its mission to provide the decision makers and experts of the industry with the comprehensive and reliable information and analysis about what's going on in the sector. The strategic vision of the center is to become a key source of such information. We are also proud to announce that Kazenergy Association and our analytical center prepared Kazakhstan Energy Outlook. I think it can complement the OPEC's insights presented in the World Oil Outlook. And you can find more about the Kazakhstan Energy Outlook here at the exhibition area at the stand of the analytical center. And today at 2:30 in the afternoon, there will be a roundtable which will be dedicated to first digital model of Kazakhstan oil and gas industry. We invite you to see how data and modeling turn into practical decisions. Let's go back to the OPEC's World Oil Outlook 2025. The first outlook was presented in 2007. It provides an in-depth review and analysis of the global oil and energy industries. Also, the outlook offers assessments of various scenarios in their medium and long-term development. Along with that, the publication presents insight into key relevant issues such as supply, demand, investment, and potential impact of the demand and other. Now I would like to give the floor to Mr. Baykalizadeh to present the outlook. Please, the floor is yours.
Thank you for giving the floor to me. Bismillah ar-Rahman ar-Rahim. Excellencies and distinguished guests, ladies and gentlemen. It is my great pleasure to present the finding from this year's edition of OPEC's flagship publication, the World Oil Outlook, here at this prestigious event. Next slide, please. OPEC's World Oil Outlook, or WOO, in short, is a key reference publication for the energy sector, providing valuable insights, detailed outlook, and thorough analysis of the world's energy future. The publication is now available free to download on OPEC's website, as well as underlying data, and it's also available as an app. Now allow me to present some of the Outlook's key findings before a panel discussion with myself and some of the WOO's authors. Next slide, please. To start with, allow me to spell out the key assumptions of our outlook. Firstly, we need to be reminded that this outlook was prepared at a time when uncertainties surrounding the global economic and political landscape are quite significant. This also relates to evolving energy policies, where there is a noticeable trend of policy pushback and intensified scrutiny of major goals, primarily in the US and other developed countries. Naturally, the outlook also reflects significant demographic changes over the forecast period, as the global population grows by around 1.5 billion, with the non-OECD region accounting for almost all this population growth. Moreover, increasing urbanization will impact further energy demand, with 1.9 billion more people living in the cities by 2050. On the economic side, global GDP is projected to more than double, with the non-OECD countries again driving growth. In respect to technology, this outlook recognizes incremental technological progress that helps to improve efficiency and reduce costs, but it does not assume any sudden technology breakthroughs. Next slide, please. Taking into consideration the underlying assumptions as well as trends in energy technology and policy. Global primary energy demand is expected to increase by 23% over the period to 2050, with the non-OECD accounting for 72% of the demand in 2050. Oil will retain the largest share in the energy mix throughout the forecast period, providing 30% of the global primary energy needs in 2050. Other renewables will have the largest and fastest growth and will reach a 13.5% share in 2050, up from only 3.5% in 2024, supported by energy policies. Notably, nuclear energy also expands based on a strong policy support. The only energy source to see a decline is coal, with its share to drop by almost 13 percentage points on strong policies to decommission coal plants and limit coal usage. Next slide, please. Global electricity demand is projected to increase from around 31,500 terawatt hours in 2024 to 57,500 terawatt hours in 2050. The major driver is the residential and commercial sector, followed by industry, transport, as well as the data centers and AI. A strong demand growth in all regions. However, 75% of growth is projected to come from developing countries as a result of rising urbanization and expanding middle classes, as well as rising industrialization. Electricity demand in OECD regions will also grow significantly, supported by rising electrification of economies and substitution of traditional fuels. In terms of the electricity generation, the strongest growth is expected to other renewables, mostly wind and solar, rising by 21,000 terawatt-hours by 2050. Additional generation expected for natural gas, hydropowers, and nuclears. Due to the stringent policies and the capacity phase-out, coal-fired generation is expected to decline by almost 3,000 kilowatt-hours. Consequently, the share of non-fossil fuels in the global power generation mix to increase from 42% in 2024 to 65.5% in 2050. Next slide, please. Turning to oil demand prospects. Oil demand will continue to grow over the entire forecast period. At the global level, demand is projected to top 113 million barrels per day already by 2030 and continue growing to 123 million barrels per day in 2050. Demand growth will be primarily driven by the non-OECD region, where oil demand is set to increase by almost 28 million barrels per day over the outlook period. However, part of this incremental demand will be offset by declines in the OECD. Demand in this region will likely decline by 8.5 million barrels per day. The largest incremental demand is expected to come from India at more than 8 million barrels per day, followed by other Asia at 5.3 million barrels per day, and then the Middle East and Africa growing by 4.7 million barrels per day and 4.2 million barrels per day, respectively. Next slide, please. Looking at the future demand growth from a sectoral perspective, it is clear that demand growth will be driven by the road transportation, petrochemicals, and aviation sectors. Indeed, oil demand in the road transportation is expected to increase by more than 5 million barrels per day to 2050, while petrochemicals and aviation will add 4.7 and 4.2 million barrels per day, respectively. Meanwhile, incremental demand in other sectors will be lower, the range of 1 to 2 million barrels per day. The only expectation to this pattern is electricity generation, where oil demand is projected to decline by 0.5 million barrels per day between 2024 and 2050, on the back of continued fuel substitution in this sector. Next slide, please. Moving to the supply side. In the medium term, non-DOC liquids supply is projected to rise from 53.3 million barrels per day in 2024 to 59 million barrels per day in 2030, thus meeting just over 50% of projected demand growth in this period. U.S. liquids growth makes up 25% of this growth, followed by Brazil, Qatar, Canada, and others. Tight oil drives rising U.S. supply, with the U.S. total liquids increasing from 21.8 million barrels per day in 2024 to 23.1 million barrels per day in 2030. Still, due to resource depletion, U.S. liquids supply plateaus from 2030 and declines to 19.6 million barrels per day by 2050. Beyond 2030, meaningful non-DOC liquids supply growth only takes place in Canada, Brazil, and Argentina, largely offset by declines in other mature producing regions. As a result, non-DOC liquids supply plateaus as just under 60 million barrels per day from 2030s. Continued demand growth means that DOC liquids need to keep growing and rise by 15 million barrels per day by 2050. As a result, the DOC producers' share of global liquid supply increases from 48% in 2024 to 52% in 2050. Next slide, please. Moving to the downstream sector. In the long term, global refining additions are projected at 19.5 million barrels per day, including capacity expansions, with almost 85% of additional materializing before 2040. The majority of the incremental refining capacity is expected to be added in the Asia Pacific. India will likely be the most significant contributor to this growth, followed by several other large countries, including Indonesia. In China, capacity additions of around 3 million barrels per day are expected in the period 2023 to 2050. Africa's projected refining capacity additions in the long term are estimated at 3.2 million barrels per day, which mirrors domestic demand growth. Considering trade, global interregional crude and condensate trade is expected to increase by over 10 million barrels per day to reach 47 million barrels per day by 2050. The Middle East is the major contributor to the global trade growth, with export volumes increasing from over 17 million barrels per day in 2024 to 28 million barrels per day in 2050. The Asia Pacific remains the most important destination, with total imports increasing from 24 million barrels per day in 2024 to 34 million barrels per day in 2050. Next slide, please. In order to meet the steady rise in oil demand as well as replace barrels lost due to natural decline, global cumulative investment at 18.2 trillion are required over 2025-2015 period in 2025 US dollar. 14.9 trillion of this, or 574 billion per annum, is needed in upstream sector. The downstream and midstream sectors require around 2 trillion and 1.3 trillion respectively. Any shortfall in meeting these needs risks market stability and energy security. Next slide, please. In addition to reference case projections, two alternative scenarios were developed in this outlook. The technology-driven scenario foresees a more rapid pace of investment in advanced technologies than those assumed in the reference case. Besides higher energy efficiency, hence lower primary energy demand, other impacts include significant fuel substitutions and changing energy mix. As a result, global oil demand continues growing until around 2035, and then will start gradually declining toward 106 million barrels per day in 2050. The gap to a reference case will be almost 5 million barrels per day by 2035 and 17 million barrels per day in 2050. The equitable growth scenario focuses on improved energy access and further eradication of energy poverty, especially in developing countries, assuming higher economic growth in absence of coordinated move to reduce emissions. In other words, local development needs in this scenario are prioritized over the global issues. As a result, oil demand in this scenario tops 120 million barrels per day by 2035 and continue growing 129 million barrels per day to 2050. This represents a difference of 6.5 million barrels per day in 2050 compared to the reference case. Next slide. Finally, let me leave you with some general remarks that outline OPEC's high-level view on our energy future and its challenges. Recent policy shifts increase the range of uncertainty for the global energy system. Inequality between the global north and south provides both challenges and opportunities for the energy industry. There are no signs of global oil demand peaking anytime soon. Continued adequate investment are needed to meet future demand needs. The world needs realistic future energy pathways with a balanced approach to lowering emissions while also ensuring energy security and growing need for ample, reliable, and affordable energy. Cooperation is crucial with a sustainable common energy futures. Thank you. Now we have prepared a very short video containing the major points of our WHO, which is now would be presented to your excellencies, madam ladies.
In a world of multifaceted uncertainties, OPEC's World Oil Outlook 2025 again offers a vision of a plausible and viable energy future. An impartial outlook for all stakeholders. Today, energy policies around the world are undergoing a thorough recalibration. Decision makers are increasingly taking a realistic view of the challenges we face to comprehensively address it. Energy security, affordability, sustainability, industrial competitiveness, and emissions. Energy demand is set to rise by 23% by 2050, driven by economic growth, rising populations, increasing urbanization, and the need to bring modern energy services to the billions that still go without. Demand for all fuels except coal is set to rise. Renewables grow the most, while oil still retains its 30% share in the energy mix by 2050. Meanwhile, demand for electricity will rise by more than 80%, primarily attributed to strong growth in the residential and industry sectors, as well as the spread of artificial intelligence tools and related data centers. Supported by policy shifts and an improved economic outlook, global oil demand is set to expand nearly 20 million barrels per day by 2050 to reach 123 million barrels per day. Powered by India and other Asia, the Middle East and Africa, and driven by road transportation, petrochemicals, and aviation, no peak in oil demand is in sight. On the supply side, the U.S. drives medium-term non-declaration of cooperation liquids growth, followed by Brazil, Qatar, and Canada. U.S. liquid supply, however, is set to peak in 2030, while total non-DOC liquids are expected to plateau around 60 million barrels per day from the mid-2030s. As a result, DOC liquid supply keeps rising, increasing by almost 15 million barrels per day to around 64 million barrels per day by 2050. In the downstream sector, the Asia-Pacific, Africa, and the Middle East lead medium-term refinery capacity additions. Later in the outlook period, these additions taper off, mirroring the projected oil demand growth trajectory and a rising share of non-refinery liquid supply. Global oil trade is set to rise by 25% by 2050, with the key Middle East to Asia route set to further grow in significance. Against the backdrop of rising demand, as well as to offset natural decline rates, global cumulative oil-related investments of $18.2 trillion are required by 2050. Two alternative scenarios to the reference case, the technology-driven scenario and the equitable growth scenario, again highlight the uncertainties ahead. This year's outlook also sees a special chapter on new charter of cooperation partner, Brazil, reflecting its huge significance for the global energy sector. Brazil is uniquely positioned to drive an all-of-the-above energy strategy and is a major player in global energy diplomacy. OPEC's World Oil Outlook 2025 is designed to stimulate debate by providing an unbiased, data-driven, and credible outlook for the world's energy future. An energy future in which affordable and sustainable energy supports the prosperity of nations and peoples around the world.
Thank you very much, Mr. Baykalizadeh, for a very meaningful presentation. I'm sure everyone in the audience has obtained something valuable for his or her future professional activity. I prepared some questions so you have an opportunity to go in some aspects in more detailed way. And my first question for you, Mr. Baykalizadeh. The global economy has shown remarkable resilience, with inflation easing and services driving growth. From OPEC's perspective, what are the underlying forces supporting this momentum, and what factors could quickly shift the short-term energy outlook in 2025 and 2026? Please.
So by looking at the performance of the world economy, we see that the economy has been resilient, more resilient than what we were anticipating before. There are three main reasons behind this resilience. The first is large economies, US, India, and China. I have to elaborate a little bit more on this topic. Now US is benefiting the strong consumer demand and also dynamics of the service sectors. And China, after a few years of the challenges, now is stabilized by the help of the policy support. In India, both sectors, industrial sectors and services sectors, are strong, and this country alone has the largest growing GDP between the major economies. These three countries together account for a major share of the global GDP growth. The second element is inflation. Now, inflation is declining and coming down from the high levels that we saw in 2022 and 2023. We projected that global inflation stands at 3.5% for this year and decline to 3% for the next year. And as you know, when the inflation is declining, central banks have a more space for implementing easing policies that will encourage investment, production, trade, and more need and demand for the energy and oil. The third element is the services sector, as you mentioned, which is now driving the global GDP growth. I mean trade, transport, tourism, and the logistics that have a very positive impact on the oil demand. However, there are some risks here. These risks are not as acute as they were before. However, we have to consider them. One of them is the high level of the sovereign and corporate debts that may make some challenges for the spending. And the second risk is geoeconomic fragmentation that make challenges for the trade and the supply chain. And the last one is, I can say that industrial production recovery in some European and Asian countries. However, with all these points, our estimation is that the foundation for the oil demand in 2025 and 2026 is robust and very strong. I hope that I have answered your question.
Thank you very much. Mr. Alameri, let's talk a little bit on the broader picture of the global energy demand. OPEC projects a significant growth in energy demand over the forecast period. while the highest demand growth will be the solar and wind electricity, followed by natural gas. Can you elaborate on the main drivers of this pattern? Please.
Thank you, Mr. Izabiko. First of all, I would like to thank you for having OPEC at this great event, and of course, it's a great pleasure to present the Secretariat and the colleagues to discuss our flagship application, the latest edition of the World Oil Outlook. Now, as Mr. Begzad highlighted in the presentation related to your question about the broader picture of the global energy demand, and it reflects steady growth, but uneven across the technologies, fuels, and regions. Now, our reference case showed that the global energy demand will increase by around 23% over the outlook period, from 308 million barrels of oil equivalent per day to around 378. This is mainly driven by the population and the economic expansion, and this will happen mainly in the developing regions, mainly Asia, Middle East, Latin America, and Africa. However, for developed countries, it is expected to stay flat or even decline by 2050. Now, from fuel perspective, we see that the largest and fastest expansion will come from renewable. Now, despite all the media attention and the policy support, renewable share just around 3.5% of the global energy mix. However, if this policy continue and the declining costs will impact the share of the renewable energy and will increase to reach around 13.5% by 2050, which is around, will add like 40 million barrels of oil equivalent per day. Also, the second largest growth for the fuel expected from natural gas. And the main driver here is the effort to reduce CO2 emission and the flexibility of gas to balance the intermittency of renewable energy. So the natural gas will increase by around 20 million barrels of oil equivalent per day. Also, on the long term, there will be interest in the low carbon hydrogen will also support the gas demand. Now for oil, indeed, oil will increase by around 18.2 million barrels of oil equivalent per day. This is mainly driven by the transportation sector and the petrochemical. For other energy sources, OPEC see all energy sources expected to increase over the outlook period, except for coal. Hydropower will increase, nuclear, and the biomass will increase. Now, the largest share for the renewable and gas, followed by oil. Even the largest share by 2050 will be from oil. Even it will decline by slightly less than 30%. However, the combined share of oil and gas will account for more than half of the global energy mix over the outlook period. Thank you so much.
Thank you. Mr. Dagan, given the oil demand you project in the World Oil Outlook, what are the key sources of new oil supply that will be and can be developed?
Yeah, thank you very much also. So first, let me just thank the organizers for having us at this event to present our World Oil Outlook. So back to your question, allow me to cover it in two time frames, in the medium term and also in the long term. And I would rather to cover it in the context of the countries participating in declaration of cooperation, that we call them DOC member countries, and the other liquid producers in the world, that we call them non-DOC in our view. So in the medium term, we expect that more than half of the needed supply in the market to come from countries outside of the declaration of cooperation, means non-DOC member countries. It will be led by the US. We expect around 1.4 MBD increase from the US in the medium term, followed by Brazil, around 1.1 MBD increase. It could be followed by some other countries like Canada and Qatar. For each of them, we may expect an increase of around 0.4 MBD in the medium term. We will also see some increases from some other countries like Norway and Argentina in the medium term. Turning into the long term, however, the picture in the long term will be totally different from medium term, as we expect that the US title production to reach a peak at around 2030, maybe not exactly at that year, but at around 2030. Then we expect that the non-DOC supply grows to be stopped and reach a plateau and remain a value of around 60 MBD in the long term. On the other side, so the needed supply in the market is expected to be provided from DOC member countries. So we expect a strong rise from DOC member countries. The share of production from this group is expected to increase from 48% to 52% in the long term. That basically it could be translated to the production level of something around 64 million barrels per day in 2050 compared to just 49 MBD at the level of 2023. Yeah, thank you very much.
Thank you very much. Mr. Lameri, I would like to get back to you. The OPEC outlook covers the downstream sector quite extensively, which is almost unique for major energy outlooks. In this regard, how does the OPEC outlook see the refining sector in the medium and long term?
Okay, thank you again. Yeah, this is indeed very important and critical segment of the oil industry value chain as it closely linked to the oil demand trajectory. Now, we see that the global refining system will add around 5.8 million barrels per day over the medium term. This is based on project-by-project analysis. And as the demand will grow, mainly for developing countries, the refining addition also will occur in the developing country, mainly the Asia-Pacific, the Middle East, and Africa. However, on the long term, there will be requirements for around 19.5 million barrels per day over the outlook period from 2024 to around 2050. And again, this 90% of this new refinery requirements will come online in developing countries. And it's important to note here that there will be closure in developed countries. This closure will be around 1 million in the medium term will be shut, and beyond 2030 there will be another 4 million barrels per day also to be closed. This will occur, the closures will occur mainly in the Europe, Russia and Caspian, as well as the US and Canada to some extent. This closure requirements important to keep the utilization rate at the sustainable level. Also regarding the long term, there will be a migration of the refining capacity from the developing to developed region. And this will already have been seen for several years ago. Also, this refining capacity and the new additions, if will not happen in the developing country, there will be requirements to be compensated from the developed region, mainly US and Europe. Thank you.
Thank you very much. Let's turn to oil demand specifically. And in this regard, Mr. Degan, what are the key findings on future oil demand?
Yeah, thank you very much for raising that point. So indeed, demand is an important section in our view. and you will find a lot of details in that section. If you have not had the chance already to look into that, just simply go to opec.org. You can just download it and skim through the section. As a key highlights that I want to say for the demand section, first of all, you will see an upward revision in our demand outlook compared to VU 2024. So we expect that the global demand to increase to 113 MBD in 2030 and to 123 MBD at 2050. So the main source of this upward revision expected to be due to strong demand in non-OECD countries, in which we expect that their demand in this region to increase by 9 million barrels per day in the medium term, and will be increased by another 19 million barrels per day in the long term. Looking into non-OECD region, for example, in India, we expect a strong demand increase in India. Something more than 8 million barrels per day increase is the expected demand rise in India in the long term. It will be followed by other regions like other Asia, Middle East, and Africa. Looking into China, we expect a deceleration in the demand growth in China in the long term, especially at the later on. We expect that the demand in China to reach a peak and just marginally drop in the second part of our forecast. In contrast to non-OECD, we expect that the OECD demand just to marginally increase for a couple of years and then start to drop somewhere after 2030. It partially offsets some of the expected demand increase that we see from non-OECD region. And overall, we expect a drop of something around 9 MBD demand drop in OECD region in the long term. Also, from sectorial perspective, we expect a strong growth from various transportation modes, as well as in petrochemical industry, to remain the backbone of the demand increase in the medium and the long term. The main source of increase is expected to come from road transportation sector, something around 5 million barrels per day increase in the long term, and also from petrochemical industry, from aviation sector. For each of them, we expect something more than 4 million barrels per day increase in 2050 compared to 2024.
Thank you. Mr. Bekrizadeh, the OPEC outlook underscores the need for huge oil industry investments of about 18.2 trillion in the period till 2050. But at the same time, we have heard calls from elsewhere to halt investments in new oil and gas projects going forward. How vital are these future investments, and what could be the consequences if necessary investments are not made?
That's a very good question. As I mentioned in my speech, there is no sign of the peak demand in the near future. So in the near future, we cannot see any peak demand. What does it mean? It means that the demand is gradually increasing and there is a necessary for the investment. Otherwise, the market will face with the volatility and we will have a tight market. The volatility is very harmful for the economy. It means that even the chance for investing in the renewables will be removed. And also there will be challenges for investing in the emission reduction. So it is highly necessary to invest and continue to make the capacity to meet the demand. Thank you.
Please join me in thanking our distinguished panelists for their very valuable and interesting insights for making this presentation. As I said, this is for the first time when in Kazakhstan the OPEC's World Oil Outlook is presented. We all hope that for you, distinguished guests, the information you received today will be useful in your future professional activities. And we also hope that these days at the forum will be very, very productive for you and that you will enjoy it. Thank you very much.